Commodity prices for agric is still a concern for Nigeria. You heard about that from Yemi Kale earlier on. But let's bring in Kodili now, Unduka, who is an analyst with a financial derivatives company to put all of this together for us. We've seen 2% decline in oil prices, yet there is no Uhuru. It's not yet Uhuru, is it? Kodili, good morning. Thanks for coming through to us. Okay, I'm sure for those of you who are analysts, the Iran nuclear deal is one significant news item. How are you analysts squeezing Iran into the oil game?
Yes, Iran is been expected that if there's an agreement with the Western powers that we'll see increased exports of Iranian crude. But we believe it will take some time for Iran to satisfy all these conditions that the Western powers have put before then. It will take months. So I do not expect an immediate increase in their exports, or even if there's an increase, just a little. But I mean, because of speculation, I mean, what people expect, and it might continue to drive oil prices downward. I think the last time Deutsche Bank made a forecast, they said they expect Iran to increase their exports by 400,000 barrels per day, but that won't be until mid-2016. So I don't really expect an immediate increase in production from their current 2.8 million barrels. Maybe a little, but not much, because I mean they have a lot of things to work on. Some of their oil rigs, whatever is dried up, and then they have to get investments and all that. So it will take some time.
Okay, let's move on very quickly. We have about 2 minutes left. Kodili, let's talk about the agri-commodities. I'm sure you've heard inflation for June now at 9.2%, as you folks at Financial Derivatives forecast that last week. The key component of that is food. Now, let's talk about agri-commodities. We haven't seen the positive effect of this price conundrum, sugar, wheat, barley, and others in that basket flow into the shelf price of what we buy or what's produced by some FCMG bellwethers, 7-Up, Cadbury, Nestle, Honeywell, Dangote. Talk to us, Kodili, about this.
Well, that's because it's quite difficult to pass on costs to consumers. So producers will rather prefer to bear some of it, then maybe just pass on a little to them, because for some depends on what they produce. So consumers might either shift to cheaper substitutes, so they tend to maintain prices and then take some of the costs themselves. So what we are seeing now is an increase in cocoa prices due to production concerns, which we've been saying in Ivory Coast and in Ghana. Then sugar as well is going up. Wheat and corn are going up as well, but I think that's temporary. That's because people are concerned about the rains. But I mean, the U.S. Department of Agriculture has already come out to say they expect large stockpiles. So in the long term, I think those prices are still going to come down, which is good for companies that make use of this. But I mean, for those that use cocoa, the confectionery companies, and then the beverage companies that use sugar, I mean, this is not good news for them, because it's going to affect their margins. Although recently we've not really seen that affect their stock prices. Rather, stock prices have been affected by the general negative sentiment in the market. So, but I mean, if this is sustained, then to affect their margins. So for the rest of this week, oil prices will likely remain low, as we expect the market to continue to react to this news about the agreement between Iran and the Western powers. And I mean, that's not good news for Nigeria, because it means our fiscal crunch will continue. I mean, the government recently bailed out some states, but I mean, how long are you going to bail them out for? What we're expecting is that if there's an increase in oil revenues, which these states, I mean, some of them largely depend on this. I mean, that's what to use part of this to pay up some of the obligations. But I mean, if revenues are going down, then that means they might not be able to meet up in future, and which might result in another bailout. So that's not good news for us at
Okay.
all. We also have our exchange rate and external reserves concerns.
Kodili, Kadili, thank you very much. We got to hang you there. Thank you very much. We slightly overrunning on that conversation. Thank you very much. We appreciate your time bringing those perspectives global into the local markets for us. Kodili Ndoka is an analyst with Financial Derivatives Company. When we come back after the break, we're looking at powering Nigeria, the country's energy sector. How much has the private sector done? We'll take a look at the independent power projects, what to call the IPP. The government has a few more of those assets to sell off. What should be done and how President Buhari should move on with the power sector privatization. We'll talk to an expert, former Nigeria's energy minister, standing by live from our Abuja studios. We'll be back with that.